Hi there, traders. This is Brad Gilbert with the FX Market Insight for Tuesday, the 9th of March. All right, heading into the Asian session, we've got a little bit of activity here with the Treasury still heading to the top side. That's giving the US dollar an underlying bid tone, which means it's going up. And you can see that very clearly across a number of instruments. Let me just get the pen again. Obviously, the dollar index heading top side. With that sort of aggressive move in the dollar index, you're sure as hell going to get the same move, but the opposite direction in the euro. And things are well on the way. Now, this was sort of popping up as a situation last week. It is following through and running through all the major pairs. So make sure you keep an eye on this. The odd one out is dollar CAD. Just with, but I tell you what, if oil falls back below $60, we are going to see this thing spike as well and probably catch up. So that's where all the activity is at this point, right? And so just coming back into the pairs now, you're not going to see all these moves rush massively through all sessions, right? The key session is the North American one. When you come into the Asian session, right, the currencies, if anything, just having a rest. So don't sort of get overly excited. One thing you can follow is the US equity futures. They are still sort of going topside, right? So that's going to create a little bit of confusion with a bit of risk on, risk off. Do you start buying the dollar block, euro, sterling, Aussie, Kiwi? Well, it might retrace a little bit, but I don't think the overall trend is going to change anytime soon. Right? These treasuries, as the Fed was talking about, are the focus for them. So just keep an eye on these yields, because if they continue to rally, the US dollar is going to continue to the top side, right? Looking at the VIX, it's just sort of hanging around sort of 25 around this sort of level. The market's quite comfortable. If anything, I think they're very nervous looking at the equity markets. Obviously, the NASDAQ got belted yesterday, and that's a function of those treasury yields going up. I think that's going to continue. Now, the Dow Jones, just on this as well, the Dow Jones is sort of just doing its own thing, but this is pretty much what it was doing the last sort of 6 months. All the activity was on the tech stocks, right? So this is where you're going to see that's the market's raw nerve at the moment. It's that side of the equity market. So make sure you keep a very close eye on that. The equity futures there for the NASDAQ are sort of going up at this point, but once again, it's probably just a bit of a retracement in that Asian session. We'll see things kick into gear once again as we go through that North American session. Now, there's a couple of things coming out. Just keep an eye on as you go through the day. Get the revised GDP numbers now. Not a big deal. What you can see, actually, let me just scroll up just one touch. You're seeing things like this, right? So usually the Japanese data isn't important at all, right? So it's just because that economy has been static for 30 years. It doesn't really sort of come into play. But what can happen is you see some of these numbers are just absolutely terrible, even for Japan. When there is very clear direction, when you do get data that is sort of inconsequential, you'll see it impact. Now, the movement on dollar yen, right, it's a bit of a dollar proxy, it's up. Dollar's going up. Now, even weaker Japanese numbers are starting to push the dollar a little bit further against the yen. Right, so even the minuscule data, if it goes with the trend, can start to come into play, and it's worth keeping an eye on the fundamentals for sure, because they are well and truly back in line once again. All right, so just have a good look across the board. This is one thing you can have a look at. So I just had the equity futures, but if you check the risk on, risk off pairs, you can see those pairs are going down. Okay, whilst the equity markets are going up. If I can just change the pen, right? The equity futures going up, the risk on, risk off pairs going down. So don't get suckered in. That tells me that the risk on, risk off profile isn't in play. What you want to be watching is the treasury bonds. Okay, if the prices keep going down, that means the yield's going up, and vice versa. And that's the market's raw nerve at this point, and the core market driver, right? Now, some of the key things that are coming out this week, you can find on the virtual trading floors. I just uploaded actually the FX report. I'll probably do a video next week, but this will tell you basically, the pairs that I'm looking at, what I think is where the best activity is. But most importantly, keep an eye on the key releases for the week, right? We've got US CPI numbers Wednesday. There's a 10-year bond auction as well, about 4 or 5 hours later. Bank of CAD. Thursday, the ECB. Friday, some Canadian employment numbers, the best. You can also come down and check out the short-term, long-term on a number of pairs there as well. So check that out on the trade floor. That's where you can get a lot of free, helpful advice, hopefully. All right, guys, that's it from me. It's very interesting, but the trend is your friend. And at this point, I can't see things changing unless we get a run of really strong US numbers. And you know what? The chances of that are pretty low at the moment as, you know, the pandemic sort of rolls itself out. We'll see how it picks up in the next month. So I expect the Treasury yields to continue to rally, the US dollar to rally, the other pairs to fall. We've got great trending markets. It's a pretty good time to be looking at them. I mean, you probably already missed it. If anything, you can either get in at these levels where it is now, and that's a higher risk trade because there's potential for retracements. Otherwise, you've sort of missed it, right? The US CPI numbers will give us the next chance. That's the next potential entry where you'll get fresh momentum, strong numbers, dollar should continue to rally. Weak numbers probably retraces a bit, gives us a chance to get into the dollar trade at a better level. All right, guys, that's it from me. Have a good trade day and all the very best with your trading. Cheerio.